Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph Show. Today I thought I'd start talking about 10 steps to tax preparation. And these are things that everyone can be doing right now to get ready for tax time. And it's right around the corner. It won't be too long till your mailbox will be filling up with your tax documents. So let's talk about 10 steps that you can take to improve that. Number one is choose a preparer. Now, we talked a lot about this in our last broadcast, but a great way to find a preparer, as I talked about before, is to ask your friends and advisors, talk to other people. Referrals are where we make most of our new client gains. So talk to people, and get a feel for, whether this is going to be a good fit for you. Like I said before, make sure they have a PTIN number. And one of the most important things is inquire about their fees, inquire about the time they're going to need to do it. Step number 2, schedule an appointment. And I really try to stress this to my clients. If you want to pick a time that's good for you, now is the time to schedule. Because truthfully, what happens is about the end of January, first week in February, everyone's getting their tax documents and our phones are to the roof with people ready to get an appointment. Well, you could have made that appointment weeks ago and said, you know what, I'm going to go ahead and set up for the middle of February. I'm going to set up for the beginning of March. It's especially important if you're expecting a refund. Why let the government have your money? Get in there soon and get it done. The next step number 3, gather your information returns. By the end of January, most things you should have. You also want to look them over. You'd be surprised how many people come in to see me. They haven't even opened up the envelopes. So they have no idea whether their W-2 is correct. The errors do happen. They don't know that if their 1099s are correct or if they're even the right 1099s, or is there some kind of information on there that says that, I had a great example a few years ago where a person got a 1099B from stock sales and it said on there, do not use this document. We will send an updated document. And we had to put their taxes on hold because they assumed they had other stuff. Make sure you've got your 1095A, which is the Affordable Care Act forms. Step number 4, get your receipts together. The only way to know whether you're going to itemize or take the standard deduction, unfortunately, is to determine the amount by adding them up. Again, you'd be surprised how many clients come into my office and they've got a stack of receipts and they expect me to sit there and add them up with them. First of all, that's not a good way to do things because you don't know what you really have. And secondarily, I'm going to charge you more because you're spending my time adding up your receipts. Wouldn't you rather spend the time of your accountant explaining something more complex or understanding a tax plan? I think it's much more beneficial for my clients to spend, half the meeting talking about what's going to happen for the future rather than, let's add up these 12 receipts from different things. Add them up ahead of time. Look for receipts for medical costs not covered by insurance. Look for property taxes, job-related investment expenses, mortgage interest statement. And take a look at your return from last year and say, these are the things I had last year. These are the things that I'm going to need again. Use a tax organizer. A lot of accountants send them out. Number 5, gather your records for charitable contributions. This is a big one. Make sure you've got those records put together, that you've got all the receipts that you need. Technically, you cannot take a deduction for a charitable contribution if you don't have that receipt in your hand by the time the taxes are filed. So if you start early and look for your documents, that'll give you time to call the charity or get on their website and say, hey, I never got a receipt for that, or value your Goodwill or Salvation Army receipts. It's very important. Number 6, brace yourself for tax law changes. I don't expect you to become a tax expert, but it helps you to know in general what's going on so you're not caught off guard. A few years back with this Affordable Care Act, there was a lot of things that took place and it was shocking to me how many people came in unprepared. This 1095 form, they didn't even know what I was talking about. They had no idea what was going on with this. And I said, listen, this is important. We have to have this. So, you would know that if you're paying attention. Read newsletters. One of the things that I pride myself in my practice is we send out monthly newsletters and we send out blog articles. We update social media. Look at those things and see what's going on. Not everything is going to pertain to you, but some of it may very well pertain to you, especially this year coming up with these tax changes. I know during our client visits this year, we're going to spend a lot of time talking about planning for the future because with some of the changes, people's tax lives are going to change change dramatically, but you need to have a basic understanding of what's going on. Number 7, make a list of personal information. Again, I'm sure you know your name, address, and social security number and your date of birth, but you'll be surprised how many people come into me, and this is generally with new clients. They don't know their spouse's social security number. Or they'll say, you know what, I have my return from last year, let me get it on there. Well, most accountants now are starring out names and names and date of birth and all that. So you need to have those things ahead of time. Know your kids' social security numbers, write them down, bring them with you, date of birth and all that sort of thing. Know the vacation home information and all that sort of thing. And this one, number 9, is something I really hadn't considered, but this article that I read was from a lady named Barbara Weltman. And one thing she says, number 9, is decide what to do about a refund. That's a great idea. Plan ahead. You might decide, because you have several options here. You might decide, well, I'm going to apply some of my refund towards next year's return. And if we're doing a good job of doing tax planning, I can laser beam that for you and say, okay, well, listen, this is going to change. So therefore, you're going to have this next year. You might want to decide whether you want to get a check or direct deposit. I'm a big fan of direct deposit. I think it's a lot safer. You don't have checks floating around in the mail. Or you may decide to contribute directly to certain types of accounts, like you might put money into an IRA, health savings account, education savings account, or buy U.S. savings bonds through Treasury Direct. All these things you need to decide on ahead of time so that when somebody like myself says to you, okay, Ralph, you're going to get a refund of, $1,254. What would you like to do with that money? You'll know the answer. Number 10. And this really pertains to new clients because most of your accountants, and I know we do, are going to have a copy of your return from the previous year, but find a copy of last year's return. You would be surprised how many new clients I have come in to see me, and I'll say to them, well, let me take a look at your return from last year. Why do I ask that? Well, it's frankly a roadmap for where we're going this year. Most people's taxes don't change that much from year to year. There's always little nuances and things that have changed from the previous year. But I really use the previous year tax return as a roadmap to plan my course of where I'm going. If you're going to a new tax preparer, you got to have this. We generally tell clients to bring in the last 2 years of returns. This is especially important if you've got a small business, if you've got rental properties, if you've got any kind of investment portfolio or things like that. You might have carryover losses from previous years. Well, if you don't have your tax return, we're not going to have that information in order to be successful in preparing your return. The bottom line to all 10 of these things is start early, and it will be a easier and a more productive and successful experience for you. These 10 steps are a great start, but the key is to get started early. Don't put it off to the last minute. And I've had so many clients in my office, and husband and wife are bickering back and forth because, well, I thought you were bringing that. Well, I didn't bring that. You didn't add that up. All that could be avoided if you just sit down and make some plans ahead of time and think about, what are the documents that you need? What are the receipts that we need to have in order? Did my accountant send an organizer? Did I even look at it? Well, I hope this was helpful, and I look forward to giving you more useful information in the future.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.